Okay, Proposition 19, the good. Now this is section number 1, I would call it, and it's the main section of Proposition 19. This is what it was marketed as. If you're over 55 years old, you're a severely disabled victim of a wildfire, natural disaster, you can transfer your current low California property taxes to a new primary residence anywhere in the state of California. And it's got to be a primary residence. So you have to live in that property as your main property, okay? And some of the other details of it, if the new property is of equal or lesser value, the property taxes stay the same as the old low rate. Now there are some caveats to that, and I'll get into those a little bit later, but as you can see up here, you have 5%, you can go 5% more if you buy within the first year after selling the old one, and 10% more if you buy between 1 and 2 years of selling the old one. And I'll get into details of that later and give you some examples. The next detail is if you buy a more expensive property, then the difference in the value between the new property and the old property gets added back to your current property taxes. And the nice thing is you can transfer those property taxes up to 3 times in your lifetime. So there are some good points of the Proposition 19, and this is actually the biggest benefit of it. So let's talk about some more details here. Let's imagine that you purchased a property here on the San Francisco Peninsula, the Mid-Peninsula, in 1989. Average sales price of a house in 1989 on the Mid-Peninsula was $300,000. So under Proposition 13, which Proposition 13 still exists, okay, your property taxes can only increase by a maximum 2% every year. So we're going to assume that since 1989, for 34 years, whatever that was, your property taxes have gone up 2% every year, and that now would bring the taxable value of that $300,000 house, the house you paid $300,000 for, brings it up to $600,000. Now that's your taxable value. But the fair market value, or the value that you could sell the property for, is now $2,500,000. So taxable value is $600,000, fair market value $2.5 million. So if you, under Proposition 19, if you buy a replacement property, replacement home for $2.5 million or less, and you sell your old home, so you're buying the replacement home first, selling your old home next, buy the new replacement home for $2.5 million or less, sell your old home for $2.5 million, then your property taxes stay at the same old low rate. So let's imagine that you're going to buy a more expensive property. You're 55 years or older to qualify for Proposition 19, and you're going to, you decide, hey, you know what, I don't like this old small house I've got. I'm 55 years old. I deserve to have a bigger house, and I'm going to pay more money for it. So you buy a replacement home for $3 million, but then you sell your old home for $2.5 million. Your property taxes, they will increase. And since the new property tax, the new property, I should say, is $500,000 more than the old one, the amount that you pay in taxes will increase. Okay, your $500,000 gets added to your tax base. And I'll give you some examples on this. So let's take a look at the math on the next slide. Okay, so remember that $300,000 house that you bought in 1989 now has a taxable value of $600,000, and that's because every year Proposition 13 has bumped your property taxes maximum or the value of the property maximum 2% every year. Okay, so it's taxable value now $600,000. Well, you just bought a more expensive property, so that $500,000 difference between the sales price of the old home, which you can see here, sold at $2.5 million, and the purchase price of the new property, which is $3 million, you're going to take that difference here, $500,000 added to the taxable value of the $600,000, which is what the old taxable value was, and your new taxable value is $1.1 million. So your property taxes have gone up, and I'll show you that here in a minute. So here's where you were. The old property taxes were $7,500. your taxable value was $600,000. And on the San Francisco Mid-Peninsula, our property tax rate is 1.25%. So 600,000 times 1.25% gives you your property taxes of $7,500. Now, you've just bought a new property for $500,000 more than the value of your old home. So your property taxes now go up to $13,750. So they were at $7,500, but you decided to move up in price. So your property taxes now are $13,750, and that's based on the $600,000 plus the $500,000 difference, brings you up to $1.1 million. So that's part of how Proposition 19 works when you're transferring your property taxes. So let's go into some more details of Proposition 19 when you're transferring your property taxes and you're 55 years old or older. So if you sell your old property first and then you buy a new one, okay, so you sell your old property first. The scenario we used before was you bought the new property first and then sold the old one. Now we're into sell the old property first, buy a new one after that. So if you sell the old property first and then you buy a new one between 1 day and up to 1 year after the old one sells, then you can add 5% to the original taxable value and still not see an increase in property taxes. Now, if you wait a little bit longer to buy that new property, if you wait 1 year and 1 day up to 2 years, then you can add 10% to the original taxable value. So you can step up in price a little bit and still keep the same property taxes. Okay, so let's look at one of the examples here. You sell your old property first and then you buy a new one. Up to 1 day after, up to 1 year after, you can add 5% to it. So let's just say, using the numbers we looked at before, you sold your old home for $2.5 million. Now you're going to buy a new replacement property for $2,625,000. That is 5% more than $2.5 million. So you can now buy a new property for $2,625,000 or less, and your property taxes stay the same. Let's look at one more scenario, and that's where we wait a little bit longer to buy the house, to buy the replacement property. So if you sell your old property first and then you buy a new one 1 year and 1 day up to 2 years after, I know this gets a little confusing, but that's the way the law was written, you can then add 10% right here, 10% to the original taxable value. So looking at the math, you sell your old home for $2.5 million and you buy a replacement home for $2.75 million. That's 10% more. Then you get to keep your same old low property tax rate. So that is another example of how Proposition 19 works. So anyways, that is the end of the first section of Proposition 19. That is when you, 55 years old or older, transfer your property taxes to a new property. So take a look at video number 2, where I'm going to talk about transferring the property taxes from parent to child or grandparent to grandchild. I'll give you some details on that because that gets a little more intricate. Stay tuned for the next video.